I mean, yeah, we're going live right now, so we're going to be live, just so you know, brother.
It's a good question, though.
But what, you want to wait for it or go?
We can go now.
Do you want to save it for the fire, or do you need it beforehand?
It's for the fire beforehand. Anytime is a good time.
Okay, so hold on. Let's do something here. Hold on. We're gonna share the screen. There. Let's see. So hold on. We're gonna technical difficulties here. Give me a second. So stop share. Then we're gonna share computer sound. You always want to click that. Okay, here we go.
Are you telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a deferred sales trust. It works for primary homes. It works for investment real estate. It works for highly appreciated public stock. It works for private stock. It works for collectibles, artwork. It works for Bitcoin, cryptocurrency. And it's literally, I think, the best kept secret. And not only that is it's new to people, but it has a track record of thousands of closes now, right? Over 25 years, 15 times no change IRS.
My mind was blown, and it's too good to be true. It's too good to be true. My CPA would have told me about it. My commercial broker would have told me about it. No, we didn't know about it at Marcus and Millichap until 10 years ago, and now we know it.
But I'll tell you, you made me a believer when we got the wire from our mutual client who made this work. And it was a real eye-opener to see that there are ways that people can use the regulatory framework, if properly structured, to invest 1031 exchange dollars in things that you would not think were like kind to what they exited from. So it was very impressive. I got to say, you are the first one I've seen pull this off, and I'm pretty what do you call it? Hesitant to believe in a lot of these kinds of things. So it's a major feat for me to say, wow, this actually really worked, and it was really cool.
So using the deferred sales trust allow them to hold on to those assets. I mean, obviously they're, the legal structures around them, they're not in their names, but now that chunk of money is a cow in their farm, a really nice cow that does some really amazing things tax-wise and allows them to get the income that they need in order to meet their expenses. It's going to extend the length of time that they're going to have income by a pretty wide margin.
1031 is a way to shelter your income when you sell the thing. The DST is a way to avoid the 1031 and not have to suffer the time penalty and free up your hand to negotiate at whatever time you figure is appropriate. And it allows you to sit on the sideline, or it allows you to accelerate when needed and accumulate your capital.
So I found you, just so your listeners know, on a podcast, and I'm like, wow, this guy is really leaned in. He's articulate. He's very smart. When I worked in 1031 exchanges, we didn't really talk much about DSTs. We just used them to sort of round out a 1031 exchange. And I never knew that it could be the only solution that you need for a primary resident to take, their capital gains and defer it and put it into another property. That was like mind blowing for me to understand that concept, which I learned on the podcast that you were on.
Over our career and during different tax periods, we've seen, these tax avoidance, tax minimization, offshore, all these different strategies undertaken to minimize or avoid taxes. And then I can tell you that, some of them are just not worth the trouble. And so I was skeptical. Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transaction. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The Deferred Sales Trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
Yeah, so I'd say be early and connect with us and just clarify your vision for what you want your wealth plan to be. And that's just not just your wealth, but that's your time and your energy. That's where do you think the market's at? Like, do you think it's a buyer's market, right? Do you think it's a good time to buy? Do you think it's a good time to be in debt? And if so, just keep buying real estate right now. But if you think it's not, and perhaps you want to wait on the sidelines and have some liquidity, get out of debt, and wait for what we call a deal to hit you over the head, then that's why you would use the Deferred Sales Trust, regardless if you're a baby boomer or if you're a professional. But essentially, if you connect with us, we're going to help you map out a wealth plan. And as part of that wealth plan, we're going to write a line down the middle of a piece of page, and we're going to say, continue as you are with the 1031 exchange, or continue as you are with the Deferred Sales Trust, or a mixture of both. And we're looking at all of the pros and cons side by side, and then let you decide what's best for you.
All right, Brett's got his coat on today.
Welcome. How are we doing today? Jake, how's it going today?
We know you mean business when you put the jacket on.
Yeah. You got to get a little bit professional here. We got Pierce, we got Jeff, we got Krishna, we got Kusha, and we're so excited for you guys to be here. And we're going to be doing breakout rooms in a little while. But in the meantime, Jake, how was your week?
Week has been fantastic. Actually spending some of it here in your state, your sunny state of California.
You come here and you feel like your taxes are going up, don't you? I mean, what happened when you flew over the top?
Well, it's all okay because I got a DST, right?
That's true. Well, excited to have you back, Jake, as we're co-hosting this for everybody, really for the foreseeable future, right? And the goal and the vision of this time together is to really just make it very simple, the Deferred Sales Trust, very transparent, and create a space where people can meet, hear from past clients, hear some commonly questions, talk about deals that are closing, and talk about some challenges, especially as it pertains to really overcoming false beliefs with the Deferred Sales Trust. This week, I'll touch on a deal that we're closing. It's a $5 million cryptocurrency case deal. And I'll touch on some of the challenges getting the exchange account set up in a way that is seamless. We're still working through that. And then talk about a couple other deals that have closed. And then just have Jake and I open it up for questions from anybody else. Okay. How's that sound, Jake?
Sounds like a fantastic way to proceed.
Excellent. And let's see here. I'm admitting another friend here. Come on in. And so let's start with the deal that I'm closing tomorrow, actually today. This is a property sale for a couple who, let me see here. That one's next week. So this is what's the one that's closing today? Hold on, we have so many closings going on. I should know this one. And I put myself on the spot here for the closing. This one is for
So while you look that up, Brett.
See, this is a good thing. So we're scaling so much that we're literally doing we have our transaction coordination team where they're taking it from the time that we set up the calls, get the things with the attorneys, to the time that it closes. They're handling that now, right? So it's allowing us to start to scale, which is almost like another part of the discussion. And that is good. Okay, now it came back to me. Okay, so it's a gal. I won't give her name, but she's in Southern California. She worked as a teacher, 30 years, retired on a fixed income. She's in a primary home. This primary home she had bought, I think it was somewhere around $200,000. and she's selling it for like $1.4 million. Okay, again, she's on a fixed income and she's looking at a huge capital gains tax. It's California, it's 33% of the gain. Now, remember, you can add the $250,000 if you're single to your primary basis, right? So for her, I think she bought it for about 140. If you're single, married, it would be 500. So her basis was like 390, but she's selling it for basically about 1.4 million. Okay, so 1.4 million minus 390 is about $1 million gain in California. That's 33%. That's $333,000. Now this is interesting, right? Because had she not sold it, which a lot of people won't sell it because of the tax, she's looking at not receiving or being able to capture that value to get cash flow. So Jake, the value of somebody who's on a fixed income with the ability to not only unlock that capital to get more income, how does that provide transformation for people, Jake? Being that you're a financial advisor and you're focused on that kind of thing.
That's life changing, whether it's from a tax perspective or just the access to capital and funds on a as needed basis. That's huge. Somebody on a fixed income, they increase the property taxes. That means they may not be able to buy their prescriptions. They may not be able to pay, their rent. That means all kinds of different things. So the fact that now she's got this huge nest egg available whenever needed, this is everything to her.
Absolutely. And she's also moving out of California. Okay. So not only is she sitting on the most amount of wealth for her biggest deal in her primary home that, remember, was not producing cash flow. Robert Kiyosaki defines your house actually is not as an investment, it's a liability. He defines an asset as something that's producing cash flow or is going to be able to get you some kind of income, right? So I tend to agree with him. And I think what's really powerful about this is it's like she's sitting on an oil mine, right? That's under her house. So I imagine she could just scrape it and it's going to produce this income, but she can't access that oil mine until she sells the house. So now she's selling the house. That one point, now she had some debt on the property. So I think she's putting around, it's like 1.2 million into the trust after closing costs and everything else. Now that's going to be an income stream. Now how much? Well, depends on her risk tolerance, and she had a risk tolerance. We scored it with a questionnaire, not anything like what Jake would do or any other financial advisor would do. Now on that amount, she's looking around, she's going to take about 5 or 6%. So that's an extra $60,000 a year. That's extra $5,000 a month. Her current income was about $4,500 a month. So she's now doubling her income. Second, she's moving out to Georgia, which is pretty cool, which is she wants to closer to family. She wants to retire out there, and her son's going to be out there. And it's the opportunity to have her income doubled, as well as a lower tax place to receive those taxes and pay taxes. So Jake, what's the power of being able to relocate and get a lower tax bracket?
Oh, it's huge. If she's on a fixed income, it's going to go a lot farther where she's moving to than what she currently is. Cost of living and everything else is going to be dramatically more flexible to her.
Yep. So just doing the math there. So she's excited. And also the third thing about the transformation for her is her son is in like the tech crypto business, and he has a business that he's launching. So she said, well, can I fund my son's business? And the answer is yes. And she's like, well, with how much of it? Well, we do have some liquidity parameters that we want to keep the trust about 20% liquid, at least at all times. And so that could go to stocks, bonds, mutual funds, conservative investments. Now, the other 80% can go to another business. So not that she's going to put all 80% into the son's business, but it could be part of the seed funding for this startup business for him, which is kind of cool. I didn't actually know the business was a crypto business until yesterday when her and her son were telling me what they were going to do, planning on doing. So they're both moving from California to Georgia, going to be funding the business, retiring. Pretty cool, right? Mom's able to do that for her son, with her son, and with the trust, all tax deferred. So I'm going to open it up for questions on this particular deal from anybody. So if you are ready to ask questions, just unmute your mic and then bring on your video screen, and I'll answer any questions about the deal I just talked about there. Or Pierce, do you have a question?
mean, it sounds like a pretty good deal. I mean, you defer almost what, 333 grand.
Mhm.
You get to fund your son, like move out of California. What else do you need?
Yeah, lower your tax bracket, right? And so that is pretty cool. So, and if there's or Jake, any thoughts or questions on that? And if not, we'll go to the next one, which is cool too.
Yeah, no, I mean,
Or maybe Virginia. Virginia, you have one?
Well, you can call me Jenny. I just wanted to, I missed the first part. I apologize. The 330,000, what was that figure?
Yeah, so it's state and federal. So state is 13.3 for California. Federal is 20. So 20 plus 13.3 is 33.3%, right? That is the capital gains tax rate collectively, state and federal. Her gain was about $1 million. So 33% of $1 million is about $333,000 of tax liability. Okay. That makes sense. Now, here's actually kind of another curveball here. Biden, as of like a week ago, announced that he may make capital gains tax retroactive from April the 1st or the end of April. So it would be kind of unprecedented, and hopefully it doesn't happen. But she potentially was looking at not 33%, but 53%, which would be $533,000, right?
Yeah.
So the value of the deferred sales trust is for her
going up.
Is 333 up to 533. Does that make sense, Genie?
Okay. I followed some of that, but I don't want to slow you down. Thank you, Brett.
Yeah, and by the way, we have a DST calculator that does this for you, right?
Okay.
This just make it simple, right? So if you're a real estate agent, if you're a commercial real estate agent, if you're a financial advisor, business broker, you can get your own, calculator, right? That literally, like, with your name, your logo, your information, it's totally free for realtors, okay? And just email me and we'll get you connected. And the client just puts their numbers in. They put in their the price they think it's worth. They put their debt. They put their basis. They put their income. The property address. Boom. Now you get an email. We get an email, and we go, "Hey, Genie, we got an email from so and so wants to sell a $2 million house. Looks like they have a liability of $500,000, whatever. Right? Would you set up a call?" And then we do the heavy lifting. So we're not asking you to be the CPA or tax attorney, right? In fact, we're not even CPAs or tax attorneys. I'm a trustee. I'm an expert in what we do, but we work with folks like Jake Miller is a financial advisor. Mitch Bloom is a financial advisor, right? And does that make sense, Jeannie?
Yes, it does. I have a financial amortization calculator. Is that the same as your DST calculator?
It's probably very similar, but this is literally going to give a side-by-side comparison. Use the deferred sales trust. Don't use the deferred sales trust, right? And it just breaks it down line item by line item, and it's really clean and really efficient way of doing it. Just answer like 12 questions, and then boom, you can send those results. Looks very professional.
Thank you, Brett.
You are welcome. Any other questions on that deal from anyone? And if so, just unmute yourself and we'll answer that question. And then otherwise, we will go into the cryptocurrency case, which actually I'm excited to kind of talk about today. So with that, let's do that. So, all right. So this is the one I told you guys about last week. And this is part of the mastermind too, just to kind of like document the journey so that it can be easier for more deals. Because my vision is once this deal closes, and I call it the Rubik's Cube of this crypto world with the capital gains tax deferral world, these different exchanges and the different ways of doing this, that this will help so many people if you're watching this. And so we're doing our first crypto one yet. Deferred Sales Trust has not closed a crypto case yet. It's done primary homes, businesses, highly appreciated public-private stocks, and this would be the first one. Now, this particular client and couple, they bought Ethereum for about $100,000 over the last 5 or 6 years. And again, it shot up to about $6 million in 2017. They did not sell because they didn't have a good tax deferral strategy. They crashed, right? So now they kind of like, they held on. It went to $9.5 million 60 days ago. Then it went to 30 days ago, it went to $12.5 million. Then it dropped back down a little bit, somewhere around 10, okay? And so they're going to sell and defer huge amount of tax. They're going to start with the first $5 million is the first chunk. So the first thing you understand, the deferred sales trust, you don't have to do it all at once. You can do it in small chunks. So we are working with a exchange company called Kraken, and Kraken's like a Coinbase or a Binance, right? And so they have it at Kraken. So I'm emailing the person at Kraken. We literally form the trust. We open it up at Kraken. We're trying to, and they have to get verified. So I'm taking my picture. I'm sending him the IRS EIN documents of the actual trust itself. I'm also sending because the trust in this scenario is owned by Capital Gains Tax Solutions. It's important to understand that they are lending to this. They don't own the trust. So I have to show them my information. My corporation happened to be owned by my family living trust, so they needed copies of that. Then they needed information from my wife. So we had to go through all of this. This has been about a 2-week process, and we're getting very, very close. But this is interesting. This last email we got from them, they say, hey, you sent this, but guess what? If it's a fellow Kraken account that's a personal account, we can't transfer it to Kraken. So I was like, what? So we did all of this just to find out they can't do it. So there's 2 solutions to this. One, he's going to send it over to Coinbase, the same amount of money, right? And then from Coinbase, send it into this Kraken deal. Or I'm going to open one at Coinbase, and he's going to send it over there. So we're still working through this. We're very, very close. But any questions or comments on that from anyone at this point?
Brett, did you check out Binance.us?
I have. I haven't opened an account there yet, but yes, I have. But what's your thoughts on that, Pierce?
It just is a little bit more of a robust platform. It might be worth looking into as far as like transferring and stuff. Coinbase has a lot of really high fees and stuff like that. I don't know how the fees are going to affect the transfer of the stock and all of that, because I mean it's close to 5% on some of the stuff.
That's a great point. We will bring that up because Binance. I have heard Binance is actually less expensive. So right, and so instead of doing Coinbase, why don't we just do Binance and take Binance back to Kraken? Is what you're saying?
Well, yeah, and with Binance, it's cool because you can use the Binance coin, which is BNB, for the transaction fees, and it'll lower it.
Oh.
And Pierce, do you have any experience doing tokens?
Yeah, I got some good and bad experience. So in 2017, I invested a lot into the old crypto market when it was going. I rode it all the way up and then rode it all the way down. I didn't sell, and then I didn't really know what I was doing, and I had it all over the place. And within the past year, I went and found it all and consolidated it and whatnot. So it just depends on, there's so many tokens. There's so much like out there that you can do with it. There's so many ways that you can make money with it. It's overwhelming.
Thoughts on that, Jake?
It's interesting. I mean, the token or the token set is just kind of like a way that you can almost like put in your own derivatives of the coins, right? And kind of almost like create a fund of your own coins.
I mean, kind of, but it depends on the coin. And it's hard to say like, oh, this is like kind of what it does, like an all-inclusive thing, because there's so much diversity within the coins themselves. Like, like you can stake some of them, or, you can invest in them in liquidity pools, or
right.
There's just so much you can do.
It's absolutely true. And it's all very customizable, but ever changing.
Yeah.
So whatever you fix it as today might be different tomorrow, right? That's the world of crypto as we live in it.
And they're volatile, so it could be worth, $60,000 today and $40,000 tomorrow. It happened last week. So just,
yep.
It's a roller coaster.
Yep. Any more questions on the case I'm working on now, or the exchanges, or how this thing works? We can even do general questions too on the Deferred Sales Trust, so you understand what it is, what it's not.
Can I just ask Brett or anyone, is all cryptocurrency volatile in terms of going up or down in value?
There are a couple of coins.
Go ahead, yeah.
There are a couple of coins that are what they called like tethered to certain things. So for example, there's a coin that's called Tether, and it basically just follows the US dollar. There's a coin called USDC, which is United States dollar coin, and it basically follows the dollar. There's so much so what those do is those allow you to put your money into the crypto space, and then you can use them as dollars to like buy and sell. So one of the big challenges with crypto still, in my opinion, is the fact that it's hard to like put money in and take money out. So like in order to you have to like sell it, and then like it has to wait, and then you have to like, do all this verifications and stuff to start accounts and whatnot. So, but once you do all that, it's hard to move money from like dollars to different cryptos and stuff. So they have these stable coins is what they're called. And they essentially just follow a specific coin, and they'll match with it. So the USDT Tether and USDCS are coins that you can use in order to do like trades within like the crypto space. So you're not having to go back to fiat currencies. I don't know if that made sense or not, but essentially it's just like a way to keep it in crypto so you can trade back and forth. And then you can also put it into like a Tether or a USDC. So like if Bitcoin crashes like it did, right, you can just really easily like transfer it over back to a Bitcoin when you want to buy low and sell
really
high.
helpful, Pierce.
And relative to its name,
Thanks.
I was just going to say, relative to its name, the stablecoin is not as volatile, right?
It's not volatile. It just follows the dollar. I mean, it'll like change like 0.00 like 2 of a cent kind of thing. So it'll be like 0.999 like 8/7 of a dollar, or like 1.00 like 21 or something like that. But it is relatively like stable to the dollar, both of the USDC and the Tether coins.
Good question, Genie. That was great. Good answer, Pierce. That was really good.
Can I just ask, what is fiat currency or fiat that you just said, Pierce? That's my last question, I promise.
Money that's not backed by anything that the governments can kind of just print. So the currency for like the United States dollar is a fiat currency.
Perfect. Thanks, Pierce. This is good. We're learning here, right? So this is remember the vision is to connect the crypto world to the capital gains tax deferral world and the real estate world, right? So we're trying to bring on experts. So friends, family, clients, right, who can add value to this discussion. We invite you to bring folks in and join this discussion every Friday. What I found is crypto folks, investors, generally speaking, aren't big stock market people. And stock market people, generally speaking, aren't big real estate people. And real estate people, generally speaking, aren't big crypto people, right? So our goal is to bring the Deferred Sales Trust and the vision as the one that helps to kind of bridge some of this gap, right? Because of the 30 to 50% capital gains tax depreciation recapture, depending on the asset, or potentially 50 to 70%, right? And if we can use the Deferred Sales Trust as that tool to help bridge this gap, help people diversify, get liquidity, not be so volatile in their investments in cryptocurrency world, get some cash flow that's coming in, through real estate. Because remember, you can sell crypto or primary business. You can put into the Deferred Sales Trust, and once it's there, you can invest in stocks, bonds, mutual funds. You can buy investment real estate passive or actively. Then you can start getting the cash flow that comes from that. You get the depreciation, right? So that's what we're experts in doing. But half the battle is just getting the word out that this is actually available and an option. So I'm going to invite, go ahead.
Can you invest into crypto from the Deferred Sales Trust?
So we're working on that, and there are things that trade on the New York Stock Exchange and different exchanges that people can buy. Like, TD Ameritrade, Charles Schwab has some things that are like crypto, like I don't know if it's the actual coin itself or a mixture of that. So I have had some clients do some at those type of places, but we haven't had anyone do it, at like a Coinbase or like straight into like a traditional crypto exchange, if that makes sense, Pierce.
So Pierce, my firm is just maybe about a few weeks out from putting together our own token set with a bunch of stable coins. This is for your very low risk investor. A lot of the people who maybe don't have experience in crypto but would like a taste of it. And just like Brett is saying, it's not really common out there for there to be like an advisor led or a portfolio of crypto. But there are various groups like Fidelity and a few others that are starting to put together something like that. It's still unclear yet what it'll look like down the road. And I think it'll be another one of those things that'll be ever changing as things evolve and develop. But in the heart of having something that is like super simple, super quick, doesn't need a lot of regulation or any of that other stuff, the token sets are there and available. They do require that they're all set up. You can derive a fee from it for having participation of an advisor and everything else. And you can put in those stable coins. And that's something that could be inside of the DST.
Good question. Good question. So any more questions right now? And then we're going to actually break out and have everyone kind of introduce themselves and tell us where they're at. So that means you're going to be going off camera and on camera and unmute ideally, right? So everyone can see you and get to know you a little bit. But any more questions about the Deferred Sales Trust before we do that in about 2 minutes? Okay, cool. So Genie, let's start with you. You were the first one to participate. So remind us where you're from. I think this is the second time you went on, and what your focus is right now.
Well, I'm in Los Angeles. I'm an EXP commercial broker. I'm new. I'm in training. I have an advisor now, which has gone great. I've met with him about three times, and he's from somewhere in Sacramento. And so, but not in the city. He's in the suburbs somewhere. And that's really great. So I've learned a lot, and I'm trying to learn about cryptocurrency, not because I necessarily want to buy it, but because I just want to understand how it works within the rest of the economy and with, investors and so forth.
Awesome. Thanks, Genie. Welcome. And
thank you.
Is it Marsal? Is that how I pronounce it? Marcial?
Marisol.
Excellent. Welcome.
Thank you. Yeah, I'm here. LaDonna Logan invited me, and she asked me to take notes because she couldn't be here. She's in another class. The reason I'm interested in this is because of the investors that we're working with. We're building globally in the funding arena, commercial funding, and so I need to understand, be on their caliber to be able to explain these items. For example, a client is selling his home at $4 million, and he had to move out of the state to not pay these sales taxes. And so he did a whole change, but he's an accountant. So I'm sure there's something that I could have advised him if I knew about it.
Mm-hmm. Yep, 100%. Thank you so much for sharing. Welcome. Jeffrey Broger, are you on, sir? Are you there behind the stunning photo, by the way?
Well, thank you. And I'm here.
Welcome, brother.
Thank you.
Will you introduce yourself a little bit and tell everybody where you're from?
Sure. And can you guys hear me okay?
Sound great.
The Zoom coming from your end has been breaking up a little bit.
You sound good.
Cool. My name is Jeffrey Broger. I am in the real estate marketing and the real estate sales arena. I've had a marketing agency that focuses on automatic lead generation and follow-up for last estate brokers with their lead flow. And I am also a commercial agent for EXP in California. I act as a referral agent. So I lean into my lead generation ability and source deals, and then get those out to my network of brokers based on property type. So that is my my background. And I actually had Brett on my podcast, Lockbox.
And Jeff's coming on my podcast soon as well, and we're looking at a little video marketing advertising thing that we'll be talking about tomorrow. So Jeffrey Broger, welcome, brother, man, and glad you're here.
Thank you.
Do you have any questions, Jeffrey, or any thoughts on anything we've talked about?
Super interesting on both examples are very interesting. The 1.2 million house is, I think, pretty similar to the introduction I just made to you and Jenna, that real estate agent in Orange County. So I'm curious to see how that goes, and definitely want to get you guys connected because, yeah, her mom has over $1 million in equity in a house and wants to sell it. And they were looking at the 1031. So very, very relevant example to a recent deferral for you guys. And then as far as the crypto, that is pretty fascinating. It made me think about this lead that I generated for a client in Los Angeles. He had a house in the Hollywood Hills that was accepting crypto. And I ran a global campaign targeting people interested in crypto and real estate, and said the only house in the Hollywood Hills accepting crypto right now. And it generated a lead for my client of a guy that has 1,000 Bitcoin. And so it made me think about like, oh man, that guy probably wants to liquidate some of that, but isn't because of capital gains, right? Probably doesn't know about the solution. So
invite him to the mastermind. Invite him to the mastermind. Have him talk. Ask his tough questions. Right. We want all of those. Everyone in crypto to be introduced to this and see it.
Yeah, absolutely. So definitely prompted me to think about that, and then I'm gonna be making a follow-up call today.
Hey, we could change his life and 1,000 Bitcoin, right? What's Bitcoin at today, guys? Is it still in the 30s? Huh?
34 something.
34,000, yeah.
35.
Buy the dip.
Buy the dip, baby.
Buy the dip. 34 million right now, right? Yeah, you know what I mean? Let's say imagine this guy's basis is $1 million, right? So just on that scenario, let's just say, that's $33 million, right? So that's a huge tax, right? You're looking at a huge tax, and so be aware of that and help someone out. Okay, cool. So we've got just a couple minutes left, and then we'll wrap it up. I don't want to go all the way to the top of the hour if we don't have any more questions. But any other questions, thoughts, anything else from Genie, Marcel, Pierce, or Jake?
Brent, I do have a question. I know that LaDonna has your first, because this is the second. This is the second webinar.
This is the third, but the second one last week, for some reason it didn't record, and we weren't on live, which I totally a bummer because it was an amazing webinar. We had like 15 people and all kinds of great questions, and the breakout thing messed it all up. Anyway, so this is the only other one that's available. You can go to my YouTube channel, Capital Gains Tax Solutions, and you can see this. We're actually streaming live there right now. We're also streaming on expertcresecrets.com. There's a YouTube channel for that as well, so you can go there. And then so from here on out, we're always going to be live streaming this, if that makes sense.
Okay, so it's Capital Gains Solutions on YouTube, right?
Yeah, Capital Gains Tax Solutions on YouTube. Yeah, and I think I can put it in the chat here. Let's see here.
Yeah.
There's the YouTube channel. Let's see here. Direct message. I want to send this to everybody. Okay, so there it is. So if you click on that, you can subscribe to the channel.
Okay, very well.
And then we got a bunch of other content on there as well. And by the way, as a little sneak peek, Pierce is going to be starting to be a co-host with the Capital Gains Tax Solutions podcast. So everyone, let's hear it for Pierce. He's going to be
thank you
co-hosting and or sub-hosting a lot of the shows coming up. Pierce and I go back about over 5-6 years now, and I'm excited for him to step into that role and to start because we have so many people want to be on the podcast. Anyway, so that's just a little side note. So look for Pierce. Pierce is going to be on the YouTube channel before you know it.
Very, very good. Well, just as the last thing, Brett, let's talk about other assets that could be inside of the DST, right? Sure. I get this question a lot from people. Obviously, marketable securities to provide liquidity. And, we have to maintain a certain balance of that within it so that we can provide that promissory note interest payment, right? Mm-hmm. But other assets, obviously real estate. A lot of people, even selling real estate, might go and buy more real estate. And they can do that within the DST. But outside of that, what are some of the most common types of assets that you see people having inside of the DST?
Yeah, the most common I've found besides those ones would be ground up development. So I have a client who's building 70 units in Tennessee, all tax deferred, using the Deferred Sales Trust to do that. So it can be investment real estate ground up development. Also important to note, we can't do primary homes, right? So primary homes would be taxable. If you're going to live in it, just pay the tax and then just go buy the primary or go build the primary. You can do hard money lending. Now, this is interesting, right? So some people who are a little more adverse to the stock market want a little more diversification into real estate, but don't want to necessarily buy the real estate. Well, you can be a lender on the real estate via different funds that do this, right? So one of them we're working with, they got about 5 billion under management as far as AUM for multifamily real estate. And then they also have separately, they have this lending fund, and they lend to people who are doing fix and flip houses. And these people have an average of 14 deals that they've done, average of 720 credit score, but they'll lend the money and then they'll sell the debt off to Wall Street to lower the risk within 2 to 14 days. So that's a nice one too. A lot of clients like that one. That's one of my most popular for folks right now because they're a little bit scared of the stock market or just cautious, and they're a bit, the prices are too high, right? So they're just kind of waiting and just getting that monthly distribution that pays about 6%. And that's for accredited investors. It's for Deferred Sales Trust exclusive clients, but that is another one there. And then you can do businesses too, right? So again, the other client who's going to be launching a new business venture, it can fund that. So those would be the main ones, Jake.
Very good. But I think we're working with you and with Todd Campbell on another case where individuals are purchasing life insurance.
Oh.
Both a case where they're going to purchase it inside of the DST, and one where they're using the DST as collateral, kind of like you mentioned, almost like hard money type of a thing, but just as a pledge towards doing a policy outside of it. Doing it as a pledge so they can get a bank loan to get a supercharged life policy and have cash-free source of immediate liquid income outside of it as well.
Yeah, that's exactly right. That's an amazing way to do extra planning, and for and Jake's a life insurance professional as well, so that's phenomenal. And by the way, I'm getting my life insurance license as well. I'm on the brink of that because we send some referrals, so that is cool. Also, reminder: $1 million more of net proceeds and $1 million more net gain. That's our minimum, right? Just so you know. So if you're listening to this, like, well, do I qualify? Is it for me? Well, is your asset at least worth $1 million? And does it at least have $1 million or more of gain? And if so, then you qualify to take the next step to see if the Deferred Sales Trust is a good fit for you. It also works for LLCs, LPs, living trust, individuals, partnerships, S corps, C corps. Okay. So you might say, is it working for me? Yes, it works for those. So again, you can go to capitalgainstaxsolutions.com. I'm going to wrap it up now. Thank you all for being here. You guys are all wonderful, and hope to see you next week. Bring a friend, okay? Bring a colleague, and we'll be doing this every single Friday, okay? 10 a.m. PST, all right? And thanks so much, everyone. Okay, have a great day.
Thank you, Brent.